We're going to look at crypto trading. So if you're new to this, don't worry, we're going to break it down for you over the next several videos. But we're going to start with the basics here. What is crypto trading? Simply put, it's just buying and selling a digital currency like Bitcoin, Ethereum. There's a whole bunch out there. The goal obviously is to make a profit. Think of it like trading stocks or forex, but instead of company shares or currency pairs, you're trading digital coins. So a cryptocurrency, just a digital or a virtual form of currency that uses cryptography for security. So unlike traditional currencies that are issued by governments, cryptocurrencies operate on a decentralized system, meaning they're not controlled by any central authority like a bank or a government. Instead, they rely on a technology called blockchain, which is a distributed ledger. It records all transactions across a network of computers. So, for example, Bitcoin, the first and probably the most well-known cryptocurrency, and this was created in 2009. Now, Bitcoin transactions are verified by network nodes through cryptography, recorded in a public ledger, and that's called blockchain, like we mentioned. So you're probably wondering, why would I trade these? Well, cryptos are known for their volatility, and this means that their prices can change quickly. And that creates opportunities for traders to make profit. So let's say you bought one Bitcoin for $10,000 and it rose to $15,000. You could sell it and make a $5,000 profit, but also know you can buy portions of a coin. You don't need to buy a full coin. So how do you get started with this? First, you need a crypto exchange. And this is a platform where you're going to buy, sell, and even trade these cryptos. Now, some popular exchanges, these are Coinbase, Binance, Kraken. And once you've chosen that exchange, you got to create an account. You got to verify your identity. And then you're going to need to fund your account. Simple. Transfer money from your bank to the exchange. And once your account is funded, you can start buying crypto. But you got to do your research. You got to understand the crypto market before you make any trade, right? Look at how the prices moved, read some news articles. There's probably a lot of good information on the broker website as well. And one common strategy, pretty simple, buy low, sell high. And this just means buy a crypto when its price is low, it's flat, and then you see some volume coming in. You sell it when the price goes up. So let's say you bought Ethereum at $1,000, and price goes up to $2,000 on volume. Well, you could just sell it, double your money. Another strategy, day trading. And this is where you're going to buy and sell within a single day. But this requires a lot of attention, some quick decision making, because these prices can change pretty quickly. So maybe you buy Bitcoin in the morning and you sell it in the afternoon if prices increased. But you got to manage risk. Doesn't matter if you're trading crypto stock or anything else, doesn't matter. Crypto trading can be highly profitable, okay, but it's really risky. You never want to put more money in than you can afford to lose. And make sure you diversify your trades by buying different coins instead of putting all your money into one. And you really want to stay updated on news. The crypto market is always changing. There's always new coins. And staying up to date with the latest news, the trends, and the top coins is pretty important. So to sum it up, you're just buying and selling currencies to make a profit. And they're digital currencies. You choose a reliable exchange, you fund your account, you do some research. Use strategies, simple strategies, buy low, sell high, or day trade it, and always manage your risk. And with the right approach, you can actually turn digital pennies into a lot of money. Talk to you soon.